and welcome back to Seasons Ebb and Flow. Thank you for coming onto this channel. My name is Lee Wright. I am a divorce coach, and today I'm going to be interviewing Thomas Namey. He is a friend here in Orlando. He's also my CPA. And he's a broker who I've hung my license under periodically when I have been using my real estate license. So I know him quite well and I trust him, and he is very knowledgeable. So I'm excited that he's agreed to do this interview today. So I'm going to turn it over to him to tell us a little bit about his background, and then we'll get into the information at hand.
Okay, thanks, Lee. Good to talk with you. I'm originally from Pennsylvania, actually, and that's where my undergraduate degrees are in accounting and economics. My graduate degree is my MBA is from the University of Richmond. But I've been in Florida since 1993, and I opened up my tax practice. It's done well. I've had clients since 1993 that are still with me. I have a lot of experience, of course, in doing taxes, corporate business taxes, forming businesses, as well as doing accounting work. But let's talk about accounting. You are a divorce counselor, of course, and I think that that's the first thing, of course, anyone thinking of divorce does and should be doing is counseling. And by the way, I thank you for someone I had referred to you. They are staying together and trying to make it work, and they send their thanks and their blessing to you.
Nice. Oh, well, that's wonderful. Yes, as much as I help people through divorce, if it is possible to keep a marriage together and be happy, I definitely advocate for that and try and help people work through that as well. So,
Yeah.
but coming back to, it's true, divorce, a lot of times you have to remind people it's the business of divorce. It is a negotiation that, aside from the emotional, personal custody side, there is a very black and white business side, and people need to stay very practical sometimes when they're thinking about the financial aspect.
Right.
So getting right in, what happens if one spouse owes money to the IRS and they're going
Well,
through divorce?
okay. Yeah, that's called an innocent spouse or an injured spouse. They're two
Mm.
separate things. As far as the IRS is concerned, if you leave a marriage and there's a balance, past due balance to the IRS, they can come at both parties.
Yeah.
And if they can grab your assets or your income, it may seem unfair, but they'll take all of it, not just half. So if you're in one of two situations, let's just say you're an injured spouse, which means that when you married this person, they already had a tax debt that they owed and were paying on. So you had nothing to do with that debt. That's what an injured spouse is.
Okay.
And nothing's guaranteed, but you can, with a good tax accountant, you can fill out the request to be considered an injured spouse and try to detach yourself from any collection efforts or any debt associated with your spouse from prior to your marriage. However, there's a case called innocent spouse, where during your marriage, your spouse is doing something you're not aware of. And I've had this happen at least twice. Suddenly you find out that you owe all this money to the IRS. You had no knowledge of what was going on. And that happens when the IRS finds out that maybe the spouse was doing something, collecting money on a 1099 or something, and says you didn't have it in your tax return, so you had no way of knowing about it. And they incurred it and they kept the money. You didn't share in that money. If you can show that, you can apply for what's called an innocent spouse status as well.
Okay, so that's essentially telling the IRS that I'm married to this person, we're splitting up. I had no idea that they were not presenting all of their information to you correctly, and I don't want to be liable for that debt.
Correct.
Okay, okay. And then what happens if they have a business together and they're splitting up, and that now means, I guess, they have to agree to hold the business together post-divorce. One person buys the other one out. Like, what are some of the options and what that looks like?
Well, it's possible. I've seen some couples stay together and work the business. They make their income from the same company, the same LLC or partnership, and they do try to work together. In which case, if there's a payroll, they have to split it separately. And if there's a 1099s that go out, depending upon which spouse is taking out a certain amount of money, and then you have to file based on the forms that get filed, the 1099s or W-2s from that business. You can still operate that way. You do have to be careful. Sometimes you want to reorganize that business. Maybe you
Mhm.
had an LLC. Maybe now you want to become an S corporation or just a partnership. So assuming you've separated and then you want to separate the assets, and this goes for investments as well. You want to find out something called the tax basis for the assets. It's not just the value of the assets when you're considering, because eventually when you go to sell whatever assets that you're bringing in, you're going to have to pay capital gains tax on it yourself because
Right.
it'll be in your name. And you want to establish what the tax basis is for each asset when you separate the assets. Also, there's some consideration for um, retirement as well.
Okay.
When you have retirement plans or investment accounts, they're different things. With investment accounts, it's not a business necessarily, but you have to be careful on separating the investments, doing the same thing and helping you analyze which investments um, have a different tax basis as part of deciding which ones, and it's
Mhm.
all negotiated, which ones you might separate or have into your account. But do not sell those investments, transfer them. That's a big word right now,
Okay.
is trustee to trustee transfer. Do not take the money out of the account, because when you sell anything,
Uh-huh.
it becomes a taxable effect, and you may end up paying taxes on it. When you transfer it, you can open up a new account, investment account in your own name, transfer certain investments over to that, including retirement. And then you won't have any tax consequences or anything to pay
Mm,
in that year until you eventually take those out or sell those assets.
okay. Oh, so when you sell an investment, I guess it's the capital gains tax and you want to avoid that. Is that the tax that you're avoiding?
Well, if you want to avoid, if you don't have to sell anything, if you're just trying to separate assets, you don't have to sell them. You can
Right.
transfer them into your
Okay.
own account. And the same thing with property, incidentally, with real estate, it might be in both of your names.
Mm-hmm.
You want to transfer that. If you don't have to liquidate it and you want to keep the property, then you have to consider the tax basis of the property goes forward with you. And that includes your personal residence, because personal residence, you have an exemption when you're a couple that you can make up to $500,000 of profit on your home if you live there 2 years or more and pay
Right.
no income tax at all. Well, half of that can come with you if you're the
Oh, I
one
see.
keeping the principal residence
Right.
and putting it in your name. So you'll be working hopefully with a tax consultant or financial consultant and your attorney to work out the best situation for you, and to at least be aware of what your actions can mean in terms of tax consequences.
Right. Yeah, it's a lot to think about
Yeah.
actually. There's so many variables in that situation or any of those situations. Then what happens if one party owns a business and they're trying to split up and like the valuation of a business? I have a few questions related to that. How do you evaluate a business? Two, if the business is maybe a newer business, but the potential for growth is huge, but the spouse has been with them as it's been growing and it's about to take off, but they're going to split up, are you only allowed what it is worth now, or do you have some access to future income? Okay, then we'll start with those.
Okay, sure. Well, a lot of it's based on how long the business has been ongoing and how long it's been making a profit.
Okay.
And also, there's inventory and assets that a business may have.
Mm,
You may have to bring in a tax accountant or perhaps an appraiser, even commercial
mm,
appraiser to evaluate the business. There are business brokers, just like there's real estate brokers. A business broker would probably be the first step to have someone come in and
mm.
evaluate the assets and value of the business.
Okay. And is there anything anyone can do if their spouse owns a business to ensure that they're not gonna, I don't know, cook their books, hide money, make it look like the business makes less than it really is?
Well, that's always something to be careful of. Even when you're married to somebody, not divorced, that's where you could become an innocent spouse, where you didn't that your spouse was getting into all kinds of other um, liability problems because they're not being honest and may
Right.
come back to you want to make sure because you were married during that period. That's when you can apply for the innocent spouse status. And one of the conditions of doing that, the other thing about separating a business is uh, the different assets that the business might have and you it just again depends on so many variables. Do you work together in the business? Is it your spouse's complete business? If you're going to split it, you want the value of half of that to be considered in your spouse's account, and you want cash or other investments, and how to evaluate all those things. But you still have to be careful about tax consequences afterwards. So a tax consultant can probably help you in making those final decisions. And before you walk into a situation later when it's too late and you took an asset that's going to create a lot of tax liability for you.
Right. Right. And then coming to the concept of buying a home post divorce, are there things that people need to be considering or
Yeah,
aware of before
don't
they
do it.
move
Yes,
forward?
don't do it. Yes, you have to be very careful. I just had a case recently of a man that came in was ready to buy a home, and just through conversation, he was living on his own, but he was still married to someone in Missouri. So he was reluctant to get a divorce. I guess they're still friends or whatever, but I discouraged him from buying a property until the divorce is final. And
Yeah.
then after the divorce is final, the spouse won't have any claim. But if you bought a house, even if you filed for divorce and you bought a house before the divorce is final and your principal residence, your spouse still could claim half interest in that property. So you have to be
Mm,
very careful.
yeah. Okay. Things to just think about. I guess it's the same thing. Not opening credit cards, buying a car, any like when you're going through the divorce process, keeping things as static as possible and as transparent as possible. I think anybody who thinks that, oh, I'm just going to forget to mention this, like it's not only is it not ethical, it could come back to bite you legally and and for your long-term relationship, just being honest and transparent. If you have to co-parent, all of that, it's just be straightforward with everything financially. It's just the right
No,
thing to
that's
do.
really that's really the second benefit of counseling that people don't realize, is that going through counseling helps people afterwards to be able to still talk together and work together on things, children, financial assets and divisions, things like.
Tom, oh, you can't see me. Wait, Thomas, Tom, you somehow. Wait, you can't see me.
Of any joint account. If you have joint debts like liabilities, like on credit cards, you have to make sure to disclose that you're getting divorced. You're no longer responsible for that credit card. Usually you can close a bank account by withdrawing your name from it. And usually you can close a credit card that you're not using. If you are using an account and it has a balance on it, you're going to have to try to get that paid off and get your name off of that account, because you don't know what your spouse may be using. But because
Mhm.
your name's on the account, you can become liable as far as that creditor is concerned.
Yeah, absolutely. So yeah, I think if you actually need to like call the credit card companies and make sure that your name is not on it, and then and in any revolving debt, HELOCs, car payments, anything like that, ensuring that all of that is very clear. Or being aware of what debts are out there, that whole financial affidavit, having that as uh, clear as possible to ensure that when you divide everything.
Yes. Well, your mortgage and your HELOC is going to be tied to the house. So
Mm.
as soon as you divide the house, you're going to have to try to go back and either divide the mortgage out, have one spouse pay off their part of it, or in the purchase, or um, in the case of um, liabilities of um, the spouse, you have to make sure that, we talked about business a little bit. In business, you can incur a lot of debts, a lot of payables, accounts payable.
Right.
And that's the other, it's not so easy keep track of those. But in general, you want to make sure to separate everything. Credit card companies know about divorces now, so they're prepared to split the credit cards, usually if you want
Oh.
them. And sometimes they will divide the debt balance, even though it may be the other spouse that ran up that debt. It might be worthwhile to split it, go your own way, because that spouse could still run up a lot more debt. And you just have to be very careful. Also,
Mhm.
on your credit agencies, and it does affect your credit when your spouse also doesn't pay on a joint account, which is another big liability that you have, is your credit risk, your
Yeah.
credit scores. And they could also, I've seen this too many times, where the spouse can open up more credit. They know all your information. It may not be legal or ethical, but it gets done. And you can't explain that to the credit agencies afterwards very easily. So go to the credit agencies and lock your account. It's very
Hmm.
easy to do. There are three credit agencies out there. You can do them online.
Yeah.
One, I think, requires maybe a phone call or verification of your ID, and lock it. You don't have to pay for their lock and protection services. Locking your account is free. So
Yeah.
there's a very good source that will help you. Also, it's free, called Credit Karma.
Hmm.
And they're a good guide to looking up and seeing what the credit agencies show that you owe, or that what you have a liability for. And you can start there with a list of things. Things
Right.
may pop up that you may not be aware of, that your spouse has opened up an account. maybe in joint name, but you weren't aware of it. Maybe you've forgotten about it. Maybe you don't know he's run up $10,000 in credit on it. And that's a good way to find out very easily is go to Credit Karma and get a list of things that are on your credit score and are reporting to the credit agencies.
Hmm. Yeah, that's monitoring your credit and having I had some of my information from some company was like exposed, and they sent me a free access to like credit monitoring. I guess you can, and so they notify me if anything happens, changes. But yeah, credit, that's Karma. I did not know about that one, so that's really good.
It's an application. It's free to join. It's Karma with a K, Credit Karma.
Yeah.
And I've used it for a long time. It's come in very handy. And there's a lot of things on there, especially when you're trying to restart your credit on your own.
Mm,
Sometimes they have credit card and personal lines of credit offers based on your score.
mm,
And you can use that. It doesn't cost a thing.
mm. And I guess people, hold on, I'm gonna edit this out. Mm. People, okay, recording with the dog. Okay. Um, a few things that I have been told, just I've started a list of things that people sometimes forget money when they're figuring out what to split and how to split. Someone mentioned escrow balance on a mortgage. What is that, and how do you look into it to figure out how you would split that?
Well, an escrow means that the mortgage company is collecting a little extra money every month and they will pay your property taxes and insurance. So it depends on how you split the house and how you're going to pay those bills. The mortgage company is not going to separate the two people on the mortgage.
Mhm.
They want more security. The escrow account, though, you have to consider that if it's somebody's responsibility to pay the mortgage and it doesn't get paid, what happens to that account? Suddenly, there's not enough in the escrow, and whoever's living in the house may end up having to pay almost all of the insurance or the property taxes. So when you in your divorce, there's a financial section, financial sharing and everything that should specify who gets the house, who gets the responsibility. One spouse may have to pay spousal support as well as child support. And we could talk about the tax effect of those things too.
Yeah. Okay. Yeah, we're going to come to that towards the end. Uh, Stock options. If somebody, the company that they work for is not public, but they do have stock options with the assumption that it is going to go public at some point, is
Yeah.
that is something that can be divided up. And I guess once it goes public, if uh, one person owns a portion, even though they don't work for the company, they still then have access to those options.
Well, it depends on the company, but a lot of private companies will say if you received, let's say, half of the stock options from a divorce, you may have to just take the virtually sell the options and take the value of them. You may not be allowed to have ownership if you're not an
Mm,
employee at the time. So it
okay.
just depends on those things. But yes, warrants, stock options, and um, those things have to be evaluated at the time of you doing the financial sharing and the splitting. And you may get where you're going to estimate the value and just take that cash at the time. There's no tax consequences when you separate assets. There
Mhm.
are tax consequences when you benefit from the basis of exercising a stock option or warrant and liquidate it
Right.
afterwards. So again, it's just a matter of keeping track of something nobody wants to hear called the tax basis. You
Yes.
can probably do that while you're getting your divorce, have your tax consultant try to look into that so that you're prepared afterwards if you have to liquidate any assets. Incidentally, talking about work, one of the first things you need to do is go and change your W-4 at work, so that
Mm,
they're going to be withholding enough. When you're married and you're putting that on your W-4, they're not withholding as much as when you go to file your tax return
mm.
and you're going to file single or even head of household. So you may get caught short at the end of the year because there's not enough withholding. So definitely adjust your W-4 at work is one of the first things you'll want to do.
Wow. Okay. Yeah, that's something I had not heard about. Um, there's someone else mentioned if someone does estimated payments to the IRS,
Yeah.
and so I guess that means they've prepaid to the IRS and that money's already there, and you might be eligible for a portion of that money.
Well, remember the terms of getting divorced as far as the IRS is concerned. It's your status as of the end of the year, the last day of the year, December 31st. So
Okay.
if you're still not divorced, even though maybe you filed at December 31st, you still have an option of married filing jointly, which a lot of people do because there's less confusion as to claiming it. But if you're married filing separately, you're entitled to half of that estimated tax payment. You can put
Mm,
that in your tax return and get credit for half, even though your spouse maybe is self-employed and was putting that all in for themselves or
right.
their business. So you want to be ethical or moral, but legally, just from the tax point of view, half of that money is yours when you're married. Now, if your divorce is final on December 31st, then you're going to be filing single or head of household, depending upon children or not. And then it's going to be dependent upon um, the financial sharing of assets. So that should be listed in there as an asset and divided, and determined as you're going through your settlement.
Right. Okay. Helpful information there. Another thing someone once mentioned to me that I had never thought of before is if one spouse does investments and they have a margin account balance on an
Yeah.
investment account. Can you explain that?
Well, margin account is just a loan against your stock value. If you have $100,000 worth of stock, you can margin up to $50,000 of that and use it to buy more stock, for instance. It's really a loan against the stock.
Hmm.
So when you're divvying up the stocks, you also have to make sure the margin for those investments are paid off. When you
Right.
transfer it, you won't be able to transfer the margin. You'll only be able to transfer the stock. So don't, be careful if you're the spouse giving away the investments, then make sure that you can make to take into account the margin against that, and so the other spouse doesn't walk away with um, without any consideration to owing money still on half of that stock value.
Yeah, so those are all like things with your assets. What about like revolving debt, like a HELOC or something? How would you split that if that, let's say they had a HELOC for 50,000 and they've used 20,000? Is that similar to a house? You would buy the other one out, or
Yes, that's whoever gets the house. Primarily, you're going to get the mortgage with it, and the HELOC is really like a second mortgage. So it'd be the same, treated the same way. You have the value of the house, but you're also getting the debt. Now, here's the problem: is let's just say one spouse, um, maybe the largest money earner, is going to retain the house because they can afford to stay in the house,
right?
and but something happens and they can no longer pay for the house, and the house goes into foreclosure and the debts on the mortgage and the HELOC are called in. Your name's still on the mortgage, even though your name's no longer on the house. So you do have to be
Uh,
careful on how that's split. And it has to be defined in um, the marital
So,
separation agreement.
yeah.
And
Yeah, what it's interesting. I think it depends. Like my ex and I trusted each other enough. I got the house in our settlement, but the mortgage was in his name. And for 3 years, we kept it in his name, even though I was paying the mortgage. And then the
Mhm.
agreement was I would refinance by the end of those 3 years and put it in my name. And that
Yeah.
worked really well for us. But I know for some people, if there isn't enough trust, assuming that that person is going to keep paying the mortgage if your name is on it is a little risky. But
It is. And it's
yeah,
sometimes life happens. I mean, unemployment or other things happen, and it's not just a matter of trust, but you can't trust to the unknown. You're taking on a risk. So
yeah,
you should take that into account when making your
right.
final divorce
But
settlement.
for someone who's not keeping the house and let's say going to get alimony and child support, they can't
Mhm.
actually apply for a mortgage until they've been getting like, is it 3 or 6 months of alimony? I think so, and have 36 months of alimony still to come in order to use alimony as part of the eligibility for the mortgage, right?
Yes, if you're, and this is prior to 2019.
Okay,
If you're receiving alimony, it's taxable income to you. After, you know, December of 2018, alimony now with any new or even adjusted settlement is no longer deductible for the giver. The spouse that's giving alimony still has
right.
to pay all the taxes on it. It's not
Yeah,
taxable to the spouse that receives it. However, the alimony, this is the mortgage company rules. So that
right.
the mortgage company for a federally insured mortgage like a Fannie Mae or um, um, a FHA mortgage, there are the rules about determining if alimony is going to be counted as income for you in your debt to income ratios. So you're all right. You have to have it for so long. You have to have a decree that shows that you're due that money, and also to um, receive it for beyond, like you said, I think 3 years or more is correct, um,
Yeah.
in order to claim it. Now, one little detail, since you brought up alimony and child support, is that if you are not getting paid what you're supposed to get paid, um, and you have to hire an attorney,
Hmm.
um, well, if you're going to hire an attorney to get alimony, the attorney's fees can be deductible in your tax to
Mm,
collect the money that's owed to you.
wow.
With one small point, just not to forget, should that situation ever come into to
Yeah.
being.
And that does unfortunately come into play
Yeah,
sometimes.
so does bankruptcy, incidentally. When your spouse files bankruptcy after they file for divorce, life can get a little complicated there too,
Um,
because you have all your assets that are still joint. You have the bankruptcy court putting a hold on everything. So
um,
that one you're going to need your divorce attorney and probably a bankruptcy attorney of your own, even if you're not filing, just to consult with to know what
oh
you can and
man.
can't do with the assets.
Wow. That must be a nightmare.
Okay.
Okay, so let's go to child tax credits and head of household. What are
Yes.
things people should know? And let's say there's only one kid versus having two kids, uh, like options and things to be thinking about.
Okay. Well, with child support, basically there's a custodial parent. In the state of Florida, you can do a 50-50 sharing of your time, child
Mhm.
sharing with each parent, but only one parent is considered the custodial parent.
Okay.
And that's done more for convenience. But primarily, the custodial parent is where the address at school the number of days or nights that the child stays at your house, you become, if you have the majority of days of the year, you're primarily the custodial parent and you're entitled to child support. And some of this depending upon your income relative to your spouse's income as well. But assuming you get child support, it is not taxable to you.
Okay.
Um, Now, child credit is another item. Right now, it's about $2,000 if you have children under 17, 16 or under, that are your dependents. And your dependents, for instance, if you're paying medical bills and other expenses that are deductible, those are itemized deductions for you because they're your dependents. Everybody probably knows that. But if your spouse has a child that's they're claiming as a dependent and you're paying medical bills for that child, you can also deduct them on your tax return as itemized deductions, even if they're not showing up as a dependent on your return.
Huh.
Another thing that's very common is that you may be the custodial parent, but in your child sharing agreement, your spouse gets uh, um, to claim them or claim the exemption for them maybe every other year. Perhaps you see that
Right.
frequently. Incidentally, the inside story on that is if you get to choose the dependents between you and your spouse and your former spouse, try to take the younger one. Uh,
Right.
and it'll pay off in the long run. But the child credit actually will go over to who's claiming the exemption that year.
Okay.
Um, Now, if you had just one child, let's just say, and you were basing your status as head of household based on having one child and you're the custodial parent, in the year that the spouse takes the exemption, you can still claim head of household as
Mm.
long as you're the custodial parent.
So, in the divorce settlement, it should be defined as who is the custodial parent, who will take
Yes,
the child tax credits, which year, and
right.
um, okay. And so, like my situation where I have the kids more than my ex, as far as I understand, I take head of household, but in our divorce settlement, we agreed he would take the child tax credit. So you can split them up, right?
Yeah, if it's according to agreement that the child sharing that your spouse will be able to claim the exemption for them. Um, they don't, that spouse can't be head of household unless they have other circumstances. But based on that child, they can claim the exemption, but they would still have to be single status or if they got married again. But you can still claim head of household. That's correct.
Okay.
Now, being
That's
head of
nice.
household versus being married or being single, you get an exemption yourself of about $7,000 more on your
Um,
tax return. That's why the status of head of household is better than single.
okay. Okay. I knew there was a benefit. I just didn't know what it was, but that's a pretty big benefit actually.
Yeah.
Um,
And if you're married filing jointly, then it won't really matter, except the exemption part only goes with wherever the child's being claimed.
okay. Gotcha. Any just general tips or things that you would recommend to people as they are starting out the process of going into a divorce?
Well, I mean, you need a team. I mean, you don't have to hire anybody right away, but you start with a counselor, marriage counselor. You start with getting an interview with an attorney, a divorce attorney, to get legal tips and advice. If you have investments or joint investments, make sure you know who your financial advisor is. You may not want to change them. It could be a joint account now. If you like them, just make sure that they understand that they're going to have to transfer them to your individual account. And a tax consultant you probably should be aware of probably before the end of the tax year, whether the divorce is final or not. to get some advice to help head off any unnecessary taxes.
Yeah.
So that's your team together to help protect you and give you as much information as you need to make good choices.
Yeah, I think having that support during such a big life transition and ensuring that these decisions that are being made that will affect your life for quite a while financially, and then just the family dynamic, trying to keep it as amicable as possible, so that
Yes.
you do have that relationship post divorce is so much more important than nickel and diming when you get to the little things towards the end, for sure.
Yeah. That and that's from experience from both of us. I'm sure it's so much nice to be able to work. But um, um on the other side, I've seen women, if you don't mind me singling them out, the situation is more common, where sometimes women are so anxious to get divorced and get away from the spouse that they don't even ask for child support. They just want to get away.
Mm.
Um, and that is almost always when I've seen that or run into that individually, they always look back and regret it. At the time you're getting divorced, there's a feeling by whoever's pushing for the divorce to get away and not worry about the financial issues, just let it go. You have to think that the financial issues are not just about you, it's about what you can provide for your children later and how you're going to be able to
Absolutely.
live. So take a moment. That's why this team of people will be able to or maybe remind you the same thing. It's worth letting your attorney or whoever's filing get the most that you can get in terms of support for yourself, spousal support as well, and especially for children. And for
Yeah.
children, also, you may even go beyond just the child support. And while they're in school, you may ask for a college fund or a percentage of liability should the child go to college that the ex-spouse would be liable for or agree
Yeah.
to pay for.
Absolutely. I
So,
think thinking
yeah.
so far in advance to college and the years, even post college, you can account for things in a settlement agreement is a negotiation. It's a business negotiation. Anything can be put in there. Like, for example, I knew my ex was going to be getting uh, um, an inheritance. And I didn't want any of that for me. I just wanted to ensure that
Mhm.
he would put a certain amount of money into an account for each of our kids when he gets that inheritance. And so, like, these are things that were so far down the line, but
Mhm.
just trying to think 5 steps ahead. Um, and that, to your
And
point,
when you file the divorce and get the final divorce, that's it. Well, you can't go
yes,
back. So try
exactly.
to be it's not being greedy or taking away from the other one or think that they can't be able to live. Protect yourself and your spouse or your
So
children.
true.
So yeah.
Yeah, for women, and I do agree. It's the women a lot of times, many times stay-at-home moms who question whether do I deserve to be asking for all of this? But I remind people the other person's career trajectory has been able to go this direction because you were there as the support. So it
Mhm.
was a team effort. So yeah, I think there are too many non-breadwinners who end up in very difficult situations post-divorce financially. And I just
Right.
remind people, a lot of my clients, you don't want the kids to be going back and forth from one house where everything is luxury, and then they go to the other house and it's like there's barely decent food on the table. Like, neither parent
Mm.
should want that for their children, to be going back and forth and have it be so different, which
Yeah.
means equitable split so that for your kids, they're not worried about one parent not being able to make ends meet. That's a
Right.
pressure on the children that you don't want to be putting them into.
Definitely. And who's going to pay for future dental bills and education bills that come up? that are beyond, normal day-to-day living expenses. And it's a good thing to foresee those events and put the split, if you will, the responsibility into the divorce settlement. So it's
Yeah.
all agreed upon up front. You don't have to keep going back and forth.
Yeah. Yeah. The nightmare for some people, I think, of like trying to keep receipts and try and get money from each other is something that we did, which I don't know, I don't think I'd read about. I don't know. We have a shared bank account. And at the beginning of the month, I kind of say, and it's for the kids' medical, for school
Right.
activities, for anything related to them. And
Yeah.
we at the beginning of the month, I'm like, school's starting. We both have to jump 300 each into that account. And then we both have
Mhm.
transparency. We can see all the transactions going in and out, their cell phone bill, anything like that. And we just
Yeah.
split that 50-50. And it's an ongoing, when they were both in braces, it was a little more. And then summertime, it gets quieter. We can put in a little less. So, but something like that is much better than I think fighting over receipts and
That's
yeah,
excellent. Yeah. Your spouse must have had a good marriage counselor.
yeah, right. Um, yeah, I think we've covered a lot of information in quite a short time. I really, really
Yeah.
appreciate you doing this. And maybe we'll do it again as I come up with more questions.
Okay.
And this has been really, really informative, though. So I'm really excited for people to get to listen to it.
Great.
And thank you so much, Tom.
You're welcome anytime. And I do charge a consulting fee if you need consulting. And one of the important things is to look for right now, if you're going to be divorced, make sure you have a copy of last year's tax return.
Mm,
And make sure you keep any tax documents that may be coming in to go to your forwarding address. Changing your address if you are relocating is very important to track down future tax documents that you'll need, and
mm,
reporting of investment portfolios. My existing tax clients, I don't charge for 5 or 10 minute consultation over the phone, or if you want to come in and review a few documents. During the year, I'm available pretty much 24/7. I think we've talked on Saturdays and Sundays. I don't encourage it, but I'm there. And if I can answer your questions too, this for my existing clients, I don't charge anything extra for that. So if you want to reach me, I think you'll have some information there for anyone who's needs some information, some help.
yeah, so I will be putting Tom's information in the description. It's Apple Tax in Orlando, Florida, and Apple Realty as well, as he's a broker. And all of his contact information will be in the show notes. And I highly recommend, he's a wealth of information. So if you did just want to do a short consult, I would highly recommend reaching out to him. And again, thank you so much, Tom. And I will let you know when this is up on YouTube for you to take a look.
All right. Yeah, send me a copy so I can touch up my photos. So,
Yeah, right. Okay, I will.
um,
I will be
thank
in
you.
touch and thank you again.
Thank you. Bye bye now.